Hello everyone. We'll discuss the stock market versus real estate today. Which is the more profitable? The stock market has historically seen more significant growth than real estate, making it a better place to invest your money. Real estate is safer than stocks since stocks are less stable than houses. In addition, real estate has a tangible value, whereas stocks do not. Do you know which stock markets and real estate are the best investment options? You'll learn what the rich invest in and how they evaluate each possibility. In this video, we'll compare investing in the stock market versus real estate and show you which will yield the highest returns. Real estate and gold have historically been the two most reliable investments. For the vast majority of people, making landlords the social elites they always were, owning real estate was a pipe dream. Even now, the considerable price increase makes owning a home seem impossible. The financial system has, however, developed so much in recent years that it now provides another method for boosting wealth. Warren Buffett is a perfect example of that in action. In other words, if you make smart, long-term stock market investments, you could do rather well. In this video, we'll talk about which investment is the best. Real estate investing is thriving today, but the stock market is a better option in the 21st century. Watch the entire video to learn which of the two, the stock market or real estate, is better. Please click the like, subscribe, and bell buttons before we proceed to help our video's algorithm improve your knowledge of finance. More videos will be posted every day. According to real estate investors, there are several disputes related to it, the best way to invest in the stock market. The guys consistently claim the reverse, and they are both accurate, though to an extent. The truth needs to be clarified. To figure out exactly where we are, we must carefully study each. Let's start by recognizing the expensive nature of the real estate. People devote their entire lives to maintaining a single property, regardless of where they live. Your parents were undoubtedly affected by that. For one real estate investment, you need a sizable sum of savings. However, you can start investing in the stock market with just $10. Naturally, that is based on the fact that, with just a few $100s, you could invest in one of the largest corporations in the world, yet most businesses, even great ones like Tesla, trade for around $200 per share. Contrary to the past, the expense is still there when you have to pay a broker. Instead, you can obtain stock for free using programs like Robinhood. However, the transaction cost is quite hefty when buying real estate. The result may or may not improve the stock market. More significant risks exist in the stock market. As a result, it is challenging to analyze the market and, in particular, certain particular stocks. Your investment will probably lose money if you don't get out of the market before 2030, possibly even 40%. The market may be overvalued because we're in an expanding period. If anything, history has shown us that no endeavor is too big to fail. For instance, large corporate organizations historically existed for both Apple and Nokia. At one point, Apple is close to filing for bankruptcy. Every day, stock values change for a variety of reasons. These could elicit an emotional response, frequently resulting in you selling at a loss. Even for seasoned investors, things operate differently in the real world. The ground beneath it will always be valuable as long as it is in a city. They typically quickly recoup their value since everyone wants a roof over their heads, even during a crisis. One of our basic needs is real estate whenever we buy a house. Knowing that you won't wake up the following day to find that your investments have lost half their value allows you to sleep soundly. The appeal of real estate is that it produces passive income. Due to rising rent, you are not even required to work. It's an unusual investment that offers a dividend yield of 7, 8, or even 10%. You could benefit significantly from that stable income. While it is rare for any corporation to deliver a dividend yield of 5% or greater, some businesses naturally pay their hazard dues. Equities operate reverse to the stock market, where a price decrease could cause you to lose much more money than you might receive from dividends. there is less of a rise in real estate. Since 2019, the average increase in home prices has been 3.8%. Over the last 10 years, Amazon's overall rate of return was 1,200%, which is 3 times the amount, or 3,700%, for Netflix, while the S&P 500 index increased by nearly 10 times, or 28%. Search incentives are only available in the real estate sector since businesses are constantly innovating to keep ahead of the competition in the stock market. In just 25 years, Amazon moved from being a startup to a company valued at over $1 trillion, but the economic climate is harsh. So, even though you were at the top just now, your arrival will surpass you tomorrow. It doesn't produce monthly passive income like real estate does regarding taxes. There are 2 approaches. The share price may rise by a whopping 1,000%. However, your wealth appears to be growing on paper. To access your money, you must sell the stock, and doing so will result in a capital gains tax of up to 37% for quick sales and 20% for long-term investments. Taxes can be reduced in several ways. Increase your savings with the money you earn from dating. Instead of paying for the entire property up front, you might deduct a portion of the mortgage-related interest payments on your tax returns. You can recover the cost of income-producing rental property through depreciation. Depreciation charges frequently result in a net loss and deductions from ordinary income for expenses like energy and insurance, even when an investment property has a positive cash flow. Our state has some decent tax advantages, so if you buy another home, you can avoid paying capital gains tax even if you decide to sell the dwelling. Of course, not everything is happy-go-lucky. Unlike stocks, you can check their financial reports to see if they are worth your money. Real estate requires a lot more effort. Finding a single rental home that is simply a portion of it can take weeks or months. You will encounter many challenges once you start putting them on paper. For instance, find tenants, for example, who will look after the property and pay the rent. In addition, the home needs frequent maintenance. There is always a part that has to be changed. All of that will result in additional expenses and costs. It also means that moving to a new city or nation could be difficult because your property might need you to stay there. But none of those issues arise while making stock market investments. Using your smartphone, you may track your portfolio's news and performance anywhere you wish. I admire the stock market because it may teach you more about the business world than a 4-year bachelor's degree. Could I hope you always perform comprehensive research on a firm before investing your money in it? This entails studying its cash flow, examining its financial statements, and conducting background research to better understand its current choices, and finding out more about the sales and goods of the company. Furthermore, it would help if you had a solid grasp of how the economy works, especially how banks fit into the larger economic cycle. So if you ever want to start a business, that knowledge will be its basis due to the intricacy of the financial system. The stock market entails more than merely buying and selling stocks compared to most people. Many more options are available to make money in the stock. For instance, shorting involves selling stocks for a profit and then repurchasing them at a loss using futures and options. You can also profit by forecasting the price of crude oil. This video's entire list is inaccessible, but you get the idea. If you grasp the stock market, you will open doors of opportunity. You get digital papers displayed on your smartphone when you buy them in stock. There is little that you can do. Your one share won't impact the company's operations much because it has an additional 5 billion shares. On the other hand, real estate gives you complete access to and control over your investment decisions. You can employ leverage in addition to the potential passive income we've already discussed. If you had $25,000 to spare, $25,000 invested in securities would provide a value of $25,000. What should you invest in? However, if you buy a $120 piece of property with a mortgage and a tax-deductible interest rate with the same real estate investment, it depends is the answer. Real estate is the perfect investment. If you're interested in passive income, even if you are a rookie investor with small starting cash, the stock market may be a preferable option if you want to aim for higher returns. Still, it would help if you also thought about your interest. It might not be for you. If you find it tedious to research firms and struggle through mountains of paperwork, your living environment also has an effect. Perhaps things are different in another country or even in your city. You can therefore come to your own decision depending on your circumstances. Please give this video a thumbs up if you enjoyed it and subscribe to our channel for more financial videos. Enjoy your day, and thanks for watching. All the best.